Hi, I'm Jessica Amir with the Finance News Network, joined by Centuria Capital Group's Group CEO, John McBain. Hi, John. Welcome back.
Thanks very much.
John, for those new to the company, just give us an introduction to Centuria Capital.
Centuria is an ASX listed specialist investment company. We have $4.6 billion in assets under management, split between $3.7 billion in property funds management businesses and $900 million in an investment bond business. Our two listed funds are both included in the ASX 300.
Turning to financials, what were some of the highlights from the first half?
Well, the first half was transformational. We've taken over a large property platform and totally changed the nature and scale of our business. Our operating earnings were $30.1 million, a massive increase from last year. And we've also got a strong focus on recurring incomes now. Our dividends are strong at 4.1 cents. And we have the ability now to use our balance sheet to grow the company even further.
Now to the business in more detail. Just tell us about your three core business units.
So our two ASX listed real estate investment trusts control about $2 billion of assets. Centuria Metropolitan REIT is Australia's largest REIT solely focused on the metropolitan office investments. So it has a range of high quality government and ASX tenants. Centuria Industrial REIT controls over $1 billion of industrial properties throughout Australia. It's the largest real estate investment trust solely focused on income producing properties. And again, it has a range of high quality tenants, both government and non-government throughout Australia. Our unlisted property funds management business controls $1.7 billion in assets throughout Australia. This business has been around for 17 years and has turned over $17 billion of assets. Our investment bond business performed well in the first half. Assets under management grew 7%, contributing strongly to the total growth in assets under management for the group. We are the fourth largest operator in the Friendly Society bond market, and we're expecting this growth to continue.
And you said 2018 was going to be a transformational year. Just tell us how it's shaping up in terms of assets under management or AUM.
Around about 12 months ago, we acquired a major property funds management platform, which was transformational for the group. By that I mean we trebled our market capitalisation and we really shifted the nature of our earnings with a far greater bias towards recurring earnings, which the market seems to have liked. During the half specifically, we grew assets under management by just under 20%. This comprised of property acquisitions through our property funds of $655 million, which makes us one of the most active property funds managers in the market. We also achieved $115 million in revaluations during the first half. And in addition, as I indicated previously, our investment bond business grew by 7%. So all in all, a very successful half and setting us up very well for the final half.
And turning to the final half, what's your guidance?
We reaffirmed our operating earnings guidance at 15.8 to 16.2 cents, very comfortable. And we're also on record with distribution guidance of a further 4.1 cents, making a total of 8.2 cents for the total period.
Congratulations on your set of numbers, John McBain, and thank you for the update.
Thanks for having me.